Welcome back. You tune into Market Cafe, where we are getting you all the updates that you need to watch out for. And let's shift focus then to a World Bank that has gone ahead and raised its growth forecast for India for both FY26 and FY27. Now, the Global Developmental Organization sees robust demand in the country, and it believes that the domestic demand can offset impact from Trump's tariffs. The World Bank now sees FY26 GDP growth 70 basis points higher at 7.2%, and estimates of the FY27 growth is 20 basis points higher at 6.5%. My colleague Ankur Mishra is joining us with the details for that.
Yes, definitely. World Bank has raised the GDP forecast for India, and 7.2% GDP is projected for FY26. But remember, it is slightly lower than what our own Reserve Bank of India is estimating. However, the impact of tariffs has been talked about in this report, and therefore, if you talk about the next year, India's economy is expected to grow at 6.5% in FY27, and now this is an easing from the estimation of 7.2% in the current fiscal, but overall, India is seen as steady growth momentum will continue for the country. In its latest Global Economic Prospects report, the World Bank has noted that the impact of higher U.S. tariffs on Indian exports is likely to be cushioned by stronger than anticipated momentum in the domestic demand. Remember, there were announcements which were made on GST front as well, and therefore the demand is going to be there on ground, and that is the anticipation which is done by the World Bank currently in its latest report. And they've clearly stated on tariffs also that despite higher tariffs on certain exports to the United States, the growth forecast has remained unchanged relative to June projections. And this is primarily because the adverse impact of higher tariffs will be offset by strong momentum in the domestic demand than previously anticipated. So all in all, the growth forecast has been raised for India till FY28. It is going to be a bright spot among the other emerging economies, at least with 6.5% growth and above for next 3 years. And the impact of tariffs is already seen in this report. So it is a kind of a positive report for India and India's growth story.
All right, thank you so much, Ankur, for getting us all those details. But with this, let's also listen into what Devinder, Pant, Chief Economist at India Ratings, had to say about World Bank's India outlook.
We have data for 3-4 months post the tariffs were imposed. And if I look at the data even for the previous months, there was not a normal months in the sense in the expectation of rise in tariff, a lot of goods were exported. Now, if I look at first couple of months data, that shows a deep double-digit decline in the exports. But if one looks at the data post that for the November month data, you will see a good growth. So just based on 3 months data, where the movement is in the both direction, it will not be correct to say there is no impact. There is impact. The impact is more felt at the sectoral level and especially the exports part. What has happened is the kind of, whether one say the reform or the kind of steps taken by the government